Hello, future CMAs. Welcome back to The Explainer. I am absolutely thrilled to be hanging out with you today. You know, as your instructor, I see just how much time, energy, and, let's be honest, coffee you're pouring into preparing for the CMA Part 2 exam. And I want you to know I am right here in your corner. My whole goal today is to demystify a topic that, honestly, can feel a little overwhelming at first glance, but it's actually one of the most strategic tools you'll use in Section A. We're talking about financial trend analysis. We're going to break the whole thing down into simple, bite-sized pieces so you can walk into exam day with absolute confidence.
So here is our roadmap for this explainer. First, why trend analysis matters. Second, the analyst toolkit. Third, a case study on Nova Logistics. Fourth, watch out for exam traps. Fifth, a live exam practice problem. And sixth, locking in the CMA mindset. Okay, let's dive into this.
Section 1. Why trend analysis matters.
Right, before we crunch a single number, we really need to understand why. You see, high net income today, it's just noise without the context of a multi-year trend. Think about it. A company might post a massive profit this year, and on the surface, everybody's popping champagne. But if you zoom out and look at the trend over, say, 4 or 5 years, you might realize their profit margins are steadily shrinking, or maybe their debt is quietly piling up. Trend analysis lets us cut right through that single-period noise. It helps us identify long-term trajectories so we can make real informed strategic predictions. Honestly, it's your ultimate diagnostic tool.
Section 2. The Analyst's Toolkit. Let's see how this builds into your actual skill set and master the core mechanics for multi-period evaluations. When we're doing trend analysis, we focus on two complementary measurements. On one side, we've got the absolute dollar change. That's exactly what it sounds like, the actual magnitude of the increase or decrease in raw currency units. Simple enough, right? But on the other side, we have the percentage change, which you also hear called the trend percentage. Now this tells us the rate of growth or decline relative to a baseline, and that is what makes comparing different line items or even entirely different companies actually meaningful. We combine these two measurements to see the full picture. Now listen up, because this next distinction is absolutely crucial for the exam. You have got to know the difference between your denominators. Year-over-year change measures growth from the immediately preceding period, so your denominator is simply the prior year. Easy. But base year trend change measures long-term cumulative growth from a fixed baseline year. In that case, your denominator is always that fixed base year, no matter how many years forward you're analyzing. Do not, I repeat, do not let the exam trick you into using the wrong denominator. By stacking these calculations across sequential financial statements, we unlock the ability to evaluate 3 vital signs of any business. We're looking at revenue growth velocity, cost behavior, and capital structure stability. These 3 dimensions tell the true story of how a business is breathing, how it's growing, and whether it's actually sustaining itself over time. Section 3. Case Study, Nova Logistics. Okay, enough theory. Let's step out of the textbook and into the boardroom. Let's put our management accountant hats on and investigate a real-world scenario with a company called Nova Logistics. We're going to use 2022 as our base year. So net sales went from $1 million to $1.5 million in 2024. That's a cumulative growth of 50%. Sounds amazing, right? But hold on a second. Cost of goods sold, or COGS, went from $600,000 to $1.05 million. That is a 75% jump. Because of that, gross profit only grew by 12.5%. And then, look at accounts receivable. It jumped from $100,000 to $250,000. That is a 150% increase. While this top-line raw dollars shows solid revenue growth, we clearly need to dig a little deeper here. And this right here perfectly illustrates what happens when we really interpret those numbers. Step 1. We have a clear margin squeeze. Sales grew by 50%, but COGS surged by 75%. That divergence tells us Nova's input prices are escalating way faster than they can raise their own prices to customers. But step 2, wow. Step 2 is a massive flashing red flag. Collections. Sales grew 50%, but accounts receivable completely exploded by 150%. Guys, this indicates deteriorating credit collection policies, or worse, some serious revenue recognition issues. The raw dollars totally lied to us, but the trend analysis exposed the underlying operational inefficiency. Section 4. Watch out for exam traps. Now, the ICMA examiners know exactly how powerful these tools are, and they absolutely love to test your ability to spot mathematical distortions. So I want this stark number to just burn into your memory, plus 400%. This highlights what we call the small base distortion.
Let's say a company's interest expense starts at attorney $1,000 in the base year and it rises to $5,000. The percentage change is going to show a massive, terrifying 400% increase, but strategically, the absolute dollar impact is just a $4,000 jump, which for a large company is probably completely negligible. The lesson? Never, ever look at percentage changes without grounding them in the absolute dollar amounts.
Aside from small bases, keep your eyes peeled for a few other high-yield distortions on exam day. First, the impact of inflation. If your revenue grows 3% annually, but inflation is sitting at 5%, well, your real sales volume is actually shrinking. Second, structural changes. Things like acquiring a competitor will completely warp your multi-year historical trend. And finally, accounting method shifts. Think moving from LIFO to FIFO. If those prior periods aren't restated to match, your trend analysis is literally comparing apples to oranges.
Section 5. Live Exam Practice Problem.
All right, take a deep breath. You've totally got this. I want to bring you into a simulated exam environment right now, just to test this new knowledge. Here's the setup. Vanguard Inc. reported the following net income figures. Year 2 was a $50,000 loss. Year 3 was a positive $150,000. What is the correct percentage change from year 2 to year 3? Your options are A, plus 400%, B, plus 300%, C, cannot be meaningfully calculated, or D, minus 300%. Go ahead, take a couple of seconds to lock in your answer.
So the absolute crucial point here is understanding this golden rule. When a base period figure is negative or zero, traditional percentage change calculations are not mathematically meaningful. Think about the math. If you plug that negative $50,000 loss into the denominator of your percentage change formula, you get an inverse or just a completely nonsensical result. Therefore, the correct answer was C. You cannot meaningfully calculate it. This is a classic high-yield conceptual trap on the exam. Do not fall for it.
Section 6. The CMA Mindset.
We have covered so much vital ground today, so let's quickly review our core takeaways to make sure you're walking away feeling incredibly confident. Number 1, trend analysis requires multi-period evaluation. You are always looking for the story over time, combining both absolute and percentage changes. Number 2, always compare interrelated trends. Check that top-line growth against cost trends and balance sheet expansion to spot those hidden red flags, just like we did with our friends at Nova Logistics. And finally, beware of mathematical and structural distortions. Watch out for negative bases, small bases, and inflation. By internalizing these points, you are building the exact analytical mindset required to completely crush Section A of your exam.
Which leaves me with just one final question for you today. Are you ready to stop just looking at the numbers and start uncovering the hidden stories they are desperately trying to tell you? Because after today's explainer, you absolutely have the toolkit to do it. So here's my challenge to you. Take this focused energy straight into your practice question bank today. Like right now, while these concepts are completely fresh in your mind. I am so incredibly proud of the hard work you're putting in. Keep studying hard, trust the process, and I will see you in our next explainer.